Hello traders, and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is October 7th, 2025, and we are looking at one of the biggest movers in the forex market, the US dollar versus the Japanese yen, or USDJPY. There has been a tremendous amount of volatility, driven by a major political development in Japan that has completely altered the landscape for the yen. In this video, we'll cover the news, correlate it with the price action, and break down the key levels you need to be watching. First, let's discuss the fundamental drivers, because you can't understand this chart without understanding the news. Over the weekend, Sanai Takaichi scored a surprise victory to become Japan's next prime minister. The market has interpreted this as a very dovish signal for the Japanese yen. Traders are now pricing in expectations for more expansionary fiscal policy and a significant delay in any potential rate hikes from the Bank of Japan. This has caused a dramatic weakening of the yen. On the other side of the pair, the US dollar's recent rise has stalled slightly due to the ongoing US government shutdown, which is delaying key economic reports. However, the Federal Reserve is still perceived as hawkish compared to other central banks, and an October rate cut is already priced in as a certainty. The focus is now on whether strong US data, once it's released, will cause the market to price out a December rate cut. So we have a powerful dynamic, a fundamentally strong US dollar against a suddenly much weaker Japanese yen. Now let's see how this news translated directly into the price action on our daily chart. I'm going to zoom in on the last week of trading so we can see this clearly. Look right here between the close of Friday, October 3rd, and the open on Sunday, October 5th. The market gapped up from a close around 147.43 to an open above 149.49. This is a massive 200 pip gap, a clear and direct reaction to the Takaichi victory news that broke over the weekend. This is what we call a breakaway gap, and it signifies a strong conviction from the market and the start of a potentially powerful new leg up. This gapped area, between roughly 147.40 and 149.50, now becomes a huge zone of support. For the bullish trend to remain intact, we would want to see the price stay firmly above this zone. Any retest of this area that holds would be a sign of significant strength. Let's zoom back out to the full daily chart to get our bearings on the bigger picture. As you can see, USDJPY has been in a larger uptrend for most of the year, recovering from the lows we saw back in April around the 140 level. After the gap, price surged yesterday on October 6th to a high of 150.47, decisively clearing the psychological 150.00 barrier. This 150 level is incredibly important, not just psychologically, but it's an area where the market has reacted in the past. News reports and analyst targets are now pointing towards a significant resistance zone between 150.90 and 151.20. This area will be the next major hurdle for buyers to overcome. If price can clear this zone, some analysts are even looking for a move towards the 154.80 level in the medium term. Looking down for support, our first key level is the 150.00 handle. Below that, we have the top of that breakaway gap around 149.50, which is the most critical support level to watch right now. A break below that would be the first major sign of weakness and would indicate the gap might get filled, targeting the 147.40 area. The price action has been extremely bullish since bottoming out in early September. We saw a strong rally from the 140s, a brief consolidation, and now this explosive move higher. The momentum is clearly with the bulls for now. Now, let's drill down to the 15-minute chart to analyze the most recent price action from October 6th. Here we can see the intraday story of yesterday's trading session. The day started with a continuation of the bullish momentum, pushing up and setting that high at 150.47. After hitting that peak, the price entered a period of consolidation, trading in a range for most of the U.S. session. We saw price pull back and test the 150.00 level multiple times, but buyers stepped in each time, showing that this level is trying to establish itself as intraday support. The last few candles of the session show the price hovering around the 150.30 area, indicating a pause before the next potential move. This consolidation is healthy after such a strong upward thrust. It allows the market to digest the recent gains and build energy for the next leg. For short-term traders, the range to watch is between the support around 150.00 and the resistance at the high of 150.47. A break of either of these levels will likely dictate the direction for the next session. So, what's the game plan from here? Let's outline the bullish and bearish scenarios. The bullish case is quite straightforward and is supported by the strong fundamental news. If buyers can maintain control and push the price above the recent high of 150.50, the path of least resistance is higher. The first target would be that major resistance zone identified by analysts between 150.90 and 151.20. A convincing break and close above 151.20 on the daily chart would signal a very strong continuation and bring the target of 154.80 into play. This scenario is reinforced as long as price holds above the 149.50 to 150.00 support zone. Now for the bearish case, or at least a case for a significant pullback. The first warning sign for bulls would be a failure to break the 150.50 high and a subsequent break below the 150.00 psychological level. If sellers take control and push the price below 150, the next logical target is a retest of the gap, starting at 149.50. A move into the gap would suggest profit-taking and a short-term reversal. The most bearish scenario would be a complete fill of the gap, with price breaking below 147.40. This could be triggered by surprisingly weak U.S. economic data or an unexpectedly hawkish statement from the Bank of Japan, though the latter seems unlikely right now. To recap, let's go over the most important things to look for. The overriding theme is the huge policy divergence between the US and Japan, which is highly bullish for USDJPY. Your key resistance levels to watch are the recent high around 150.50, and then the major zone from 150.90 to 151.20. Your critical support levels are the 150.00 psychological handle and, most importantly, the gap support which begins at 149.50. Given the powerful news catalyst, the probability seems to favor the bulls in the short to medium term. I would assign a roughly 65% chance of price testing the 151.00 area as long as we remain above 149.50. A break and hold above 150.50 would increase the likelihood of this scenario. There is about a 35% chance of a deeper pullback to fill some or all of the gap, which would become more likely if we see a firm rejection from the highs and a break below 150.00. Keep a very close eye on the newsreel. Japanese wage growth data is due out tomorrow, which could add more volatility. Beyond that, the next US CPI and non-farm payrolls reports will be absolutely crucial in shaping the Fed's path and the dollar's strength. The market is on a knife's edge, but the direction seems clear for now. That's all for today's analysis of USDJPY. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. Trading involves significant risk, and you should always conduct your own research and due diligence before making any investment decisions. If you found this breakdown helpful, please hit the like button, subscribe to Explain the Charts, and ring the bell so you don't miss our next video. Thanks for watching.